Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, June 10, 2023. I'm Harvey Freed. She's Becky Alley. Good morning, Becky.
What is going on, everyone? Happy Saturday and happy Taylor Swift hangover day. Everybody out there that went to the concert and stood outside the concert and wanted to be at the concert and thought about being at the concert.
Hey, they get one more
Our
crack at it.
homegirl in the house was at the concert. What's up, Kelly McCree from Stoneway Group? We are so happy to have you in the studio with us.
Thank you for having me.
All right, Kelly's got a little bit of a voice left. She had the districts. We'll talk about that, Kelly, because I'm a softball junkie. My niece is in a regional game. Bloomfield Hills, a little salute to them. Bloomfield Hills girls softball. They are jamming. They won the district last week. But I liked your team, too, at Troy Athens, Kelly.
Yeah. Head coach Carrie Brennan there, yeah.
You guys did a great job. I actually caught that doubleheader. So salute to all the girls out there kicking some booty out there. We're a baseball family, so like sports sort of fits in with this radio show today. And little vibes out there to all the people out there. There's still a lot of high school baseball going on and the women's softball. And you're a jock, too. You're a good player, Becky. You're no slouch. Even though you're a great mortgage person, you're also a great athlete.
I feel like athletics just in general just help. If you not everyone's an athlete, I get that. But like when you have a good coach, it goes in hand in hand with what we do professionally, right? Those people change your life. It teaches you at a young age that life isn't fair. You're only as good as your weakest player. It's not just always about yourself. It's about that collective and working together. And, so the fact, like my little Talia, she's got a game in Gibraltar today, but she's turning that corner as an athlete. She's going to be in the 5th grade next year, and she's coming into that athleticism, and I love to see it, and I love that you coach too. And, we kind of just, put that out there because it made such an impact on ourselves.
Yeah, I like how sports plays an impact on everything, but also, Kelly, like everyday life does. And yesterday I was hearing all this talk about, the big show, the Taylor Swift. They're going to redo it again tonight. So a little heads up to everyone out there. The Tigers got to get their act together. But Kelly, talk about it's not that difficult. There are some normal folks out there that bought tickets at a regular price to check out this once in a lifetime experience. And again, maybe Taylor comes back in 3 or 4 years, but talk about the plan. It's just like in everyday life. You get the Uber ahead of time so you don't have to pay the double down money. You get to the event a little bit earlier. It sounds like home ownership to me. It's like planning, really setting up your plan and your team to buy this house.
Oh, yeah. I mean, it definitely kind of mirrors that. You definitely have to have a plan, work the plan. It's very, very similar. If you don't plan ahead, you can't just kind of jump in. And it's very similar in coaching too, actually. I mean, I carry that over in the same sense. I like to coach my clients, in carrying that over, that passion that I have for sports. I like to coach my clients, and make sure that they have a plan going into purchasing or selling their home. Make sure that everything is well-rounded. You have to make sure that when you're going into, the situations of purchasing or selling, that, you're setting yourself up for success.
Yeah, you're either, so what we're talking about, like planning to fail or fanning to plan is planning to fail. That's what we're trying to say. Yeah, and that's to that point, right? Because like if you plan ahead, you want to go somewhere, you're going to get there, how you're going to get there. And if you didn't plan ahead, you're the ones that were actually trying to get those last minute tickets and paying these ridiculous prices, which is the same as what rent is too, ridiculous. And if you want to divorce rent forever, you need to get together with the right professionals and plan, because renting makes sense sometimes. But then sometimes it's time to just move on from it. And I feel like some people rent because they feel like they don't qualify. They don't know what the action steps are. So if you're tuning in and you're renting right now and you want to know what to do, give us a call at 248-539-9797, because we're here to answer all your questions. And I actually even want to get into like some of the doomsday people that are almost discouraging people that are in the process of buying. I get a lot of that.
Yeah, that's not cool at all. 248-539-9797. I got to go to this call out here because Paul, you're calling in, and if we can bring him up real quick, Eric. There he is. Hey, Paul, thanks for calling in. Now, I'm not sure. It says, great job, Becky. What's going on here?
Well, we're looking at a property in West Michigan, and my wife said, purchase the home, make it happen. And we had not sold our other home, so we had to do a few creative things. And we talked to Becky, and she was able to give us a great rate. And we were able to, work it out in a time schedule. It was really tight. And I just wanted to give her a shout out. Thank you.
Thank you so much. We did not pay Paul to call in today, but thank you so much, Paul. Yeah, it wasn't a great experience, speaking and working with you. But yeah, we had a little bit of a tight deadline. We had to turn and burn in 15 days.
Oh, wow.
To get them where they needed to be, and it was during the Memorial weekend. But part of my success, though, was your success, Paul, because you and your wife did everything right from the start. We had that conversation. You were on it. You got me all your documentation the way that you're supposed to. And that's what allows us to move so quickly, because you guys were a blessing to work with. You made my job very easy.
You made a good decision, Paul.
Well, one of the other things, too, is the other mortgage banker, and I won't mention names, was inconsistent with the information. So after I had an accepted offer, I had to, move over and work with you. And it was a recommendation from our daughter who owns a real estate company in Arlington, Virginia. And she worked with someone with Fairway, and your name popped up as a top producer. And so I immediately called you. So anyway, it all worked out well.
Paul, I love the call. Congratulations. You got a second home, it sounds like.
Yeah, well, yeah, he got a second home, but actually we got another one to sell. So I want him to actually give his address out, or, because you guys are accepting offers, correct?
Yeah. We have a home in Rochester that's on the market. It's in the Stony Point subdivision. It's right in the Van Heusen Farm neighborhood. It's at the end of the block, and it's 1672 Stony Creek Drive. And it's on the market. And I think, did my agent call you, Bethany?
She has not called me just yet about the Rochester Hills property that you're trying to sell. No. But as soon as she reaches out to me, I'll do whatever you guys need me to do to get the top dollar that you guys are looking for.
Hey, Paul, thanks for the call. We'll let you go and definitely give out that information. Well, homes are on the market, Kelly. So wait a minute here. Paul's telling me he's got a house on the market. I know lots of families that are looking in Rochester Hills and Troy. And all Southeast Michigan. It doesn't matter if you're down in Trenton or Brownstown. I got those calls this week, too. Mm-hmm. Families are looking to buy a house. There's very little inventory out there. So, again, we talk about this plan. And, Becky, I'm still getting weird calls Saturday, Sunday afternoon. Hey, Harvey, my guy's about to make an offer. He hasn't even sent in his documents. He hasn't got his plan together. And that's really what our vibe is this morning. There's homes on the market. It's not doomsday out there if you put the right plan together.
Right. It's not. And you really should call Becky to do that. You got to get your stuff into her. It's really important to get your stuff together. Realistically, you have to start somewhere. You give a real estate professional a call, whether that be a lender, a real estate agent. You have to get on the ball. You have to get going. Or else you're going to wait. You're going to buy that $3,000 front row ticket or the nosebleed ticket. That's what you're going to do. If you're going to wait, I feel like people are always waiting for the next one. No, we're going to wait. And, it's always a thing. Like they were always asking, what should we do? What should we do? Do what feels right. Yeah. Or else you're always going to be waiting. They're always asking other people, what should we be doing? Well, what feels right to you? What do you want to do?
Yeah. I always say that if you talk to enough people, someone's going to tell you what you need to hear or what you want to hear, but it's not what you need to hear. And sometimes it's about having the right conversation. And I'm glad Paul called in, because I actually was remiss to know that there was even another lender involved. I think it was just mainly touched on just really briefly, but clearly you have a conversation with someone and it doesn't feel right, have another conversation, because had he not been directed to me, he might have had a completely horrible experience, because sometimes people keep just trudging down this road and it doesn't feel right. And then they have this horrible experience because they're like so deep into it, or they got with a lender that charges an application fee. If someone is charging you an application fee, run for the freaking hills. Like, just don't even deal with it. We call it hostage money, because what happens is I'd rather someone not work with us because we told them the truth than work with me because we forced them, we took money from them, and now we're having this horrible experience, right? We don't do that. Our conversation and our advice, it's free. It's free of charge. When you talk to Kelly, it's free of charge. She's going to give you her best self, because it's not if, it's when, right? And it doesn't matter. You're not in it for the money. You're in it for the experience, the long haul, like how we can change people's lives for the better.
Right. I'm not trying to sell your house out from under you if it's not the right fit for right now. I'm not trying to sell you a house if it's not right for you right now. Mm-hmm. That's not the point of our industry, to make moves on you that just aren't right for you right now. And I'm going to give you the right things to do.
Right. Selling a house is easy in today's market, but you got to go buy another one, and you need that education and knowledge behind you. You got to figure this all out. Get the right people on your team is our theme this morning. Get 248-539-9797. We'll take your calls. Buying or selling real estate. Keep it here.
Right now.
We are back, 9:14. If you just joined us, it's the Hardcore Mortgage Real Estate Business Show in our 23rd year, giving you great information about buying and selling homes. Kelly McCree joins us from the good company, Stoneway Group. Our special guest, of course, I'm Harvey Freed. She's Becky Alley.
I am.
Lots going on this week. The Fed's going to have that meeting Tuesday and Wednesday. Some of them are hinting that they're not going to move that Fed funds rate up much more, but we'll see what happens with that. Keep an eye on that.
Yeah, I feel like they've done enough. I mean, honestly, granted, it's above my pay grade and no one really cares what the peanut gallery over here has to say as far as rates go. But I do think they've thrown enough rocks in the pond to let enough ripples happen. They just need to let it settle down and just see what's happening. And just to remake this point, we talk about it a lot on the show. When the Fed is announcing these rate hikes, it has more of a direct effect on the home equity lines of credit, your car loans, your student loans, your short-term debt, like your credit card interest rates. So people are calling like, oh, I want a home equity line of credit. Well, their hair is their wig falls off when I tell them it's double digits. And it's kind of comical that people want to clinch their pearls over where the normal like interest rates are for mortgages, which if you're in the sixes, that's still a nationally low average in comparison to historically, right? So if you can be in the sixes, people will like literally, they're like, oh my God, it's so high. But then they're going to take out a home equity line at 10% plus. It's crazy. Or their credit card interest rates that they don't even bat an eyelash at. You just need to really be educated as far as really how the mortgage rates are affecting you. And the little bit of the higher rates have been our friends because it's eliminated these really over the top, over asking prices. I mean, you're still having to go over asking, as you know, Kelly,
Yes, yep.
on these more desirable homes. But I have a lot of loans in my pipeline that are at asking, concessions. They don't care if it's contingent because some of these homes that need a little bit of work, they have to sell somehow, and people are still getting really good deals in some situations.
Yeah, in certain situations, they are, like you said, if they are more desirable homes in desirable areas, they are running into competitive offers. But you are running into instances where if it needs a little bit of work, you can definitely run into concessions or at asking. And then you do get that more of that deal feel to it right now, which is great. And definitely in the sixes, like you said, is historically not all that bad. But when it does run into a competitive situation, it comes back to motivation. If it's something that you want right now, if it's something that you want to get out of that smaller home or out of that bigger home into a home that's going to be more appropriately sized for you, and it is a competitive situation, get into that home because you want it. It's something you want to do right now. And it works for you. It works for your family. It works for your lifestyle. Do it. And you can always refi in the future. And don't be afraid of that interest rate. If you can afford that payment right now and it works for you and you're comfortable with that, do it. Mm-hmm. And it's going to work for you. You're not going to be disappointed with it. You're not going to be disappointed with that home.
I got some clients in the low sevens too. Some people still in the low sevens. Again, you might be putting a little bit less money down, credit scores, and some other things can affect your interest rate. But again, if you're not paying points, understand what all that is. And I'll throw it out there again. Since I've been doing this for 31 years, when I ask clients to this day, they're new clients, they're calling me, got people on the street, Harvey, what's your rate? What's going on? I always ask, what's a discount point? I ask a tough question. What's a discount point? Less than 1% of the folks really even understand that because you just don't do this every day, Becky. It is new information out there. Whether you're bought your first house, your second house, most of the families are still getting educated on how this all works.
Well, they don't teach it in school. And I actually have a first-time home buyer. We actually had almost these exact conversations, between ourselves. And part of it was she asked me what discount points are. What is, then you get a lot of like, what's your APR? What's your APR? I want everyone to know this, that an APR is an arbitrary number, right? It is important because it factors in all the fees. But guess what? If you call a mortgage lender and they're charging an application fee, that is not included in the APR. So their APR could be the same as mine, but they're actually charging you more fees. So that's why I won't be like, what's your APR? It's kind of silly. And then if someone is calling around you just asking what the rate, well, there's more questions that go into that. What is your credit score? What are you putting down? What is the property? Is it a condo? Is it a single family? I mean, so all these things go into it. And that's where the education piece is. I would rather spend an extra 45 minutes on a call with someone than just hammering out a random rate that's going to be artificially low. And then I'm going to turn around and say so when you're calling around, I guess what I'm saying is they know that you're shopping around and they're going to give you some random ridiculous rate. And then once you get all their information, be like, oh, well, now that I have this information, XYZ is going to change. And that's where they get you in. And then at that point, some people have already paid these silly application fees that we call as hostage money. And another thing I want to bring up real quick is this first-time home buyer. She said, I hear a lot that it's a bad time to buy. And a lot of people are telling me that, I shouldn't buy right now. And I said, okay. Well, what do you think? Do you think it's a good time to buy? And she was like, well, the interest rates are a little bit high, but I can afford the payment. And I go, well, what is high to you? And she was like, what are you expecting? And so we had these conversations. I was like, what scares me? You paying 100% interest on a home that you do not own. I go, to me, that would be more of fear in my heart than you paying a 6% interest rate for a little bit of time till these rates eventually change. And then now you have ownership in your house. I go, every month when you're making that payment, I go, your ownership is deeper and deeper and deeper. I go, if you were to stack $50,000 in front of you because you could have $50,000 in equity. I go, just because it's not there, you don't see it, doesn't mean it's not there. And I was like, that is, so the next person in your family that says, oh my gosh, I can't believe you're buying right now, it's so crazy, remind them of that. I was like, because just because they bought a house 30 years ago, why aren't they bragging about the 15% interest rate that they had 30 some years ago? This is an amazing time to buy, like Kelly said, if you're so inclined, because these are temporary moments in time. We are in a cycle, and these rates are going to come down eventually.
248-539-9797. We are brought to you by Capital Mortgage Fund. You can check out Becky and myself at 1-800-LOW-RATE, the best mortgage banker. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, equal housing lender. We throw that out there because, yeah, Becky, even the first guy, he reached out to someone in Virginia. Sure enough, they got in touch with us here. We do mortgages in all states, and we have this unbelievable team of over 6,500 people, employees at Fairway for over almost now 30 years. Capital Mortgage has been around for over 31. And we have lots of quality people, the professionals in the industry. And I'm hearing it still. My buddy Robert, a big-time realtor, gives me a call yesterday, and he was saying, Harvey, there's still too many of these agents. They don't know. They're fumbling around. They're not making the return phone calls. And the same on the lender side. We're actually seeing some families, too, walking away from transactions. They don't have the education behind them. So now they're getting sticker shock when they find out that they just signed on $30,000, $40,000 over asking because they want that move-in condition house. That lack of education is going to hold you back.
Yeah, for sure. And I want to kind of direct that over to Kelly, right? So you're in these situations. We're going to talk about the more desirable ones, the going over asking. How are you setting those expectations so you don't have the buyer's remorse, right? Eventually they have like, oh my God, what I just get myself into, and people are panicking. So how are you setting up your buyers for success so they feel comfortable with that purchase?
Well, and again, it goes back to motivation. If it's something that they want, we have to set expectations from the get. I like to have that conversation right off the bat and set those realistic expectations for what they want and what's desired. If it's something, if they want that turnkey at a certain price point and all the bells and whistles, if it's something that is going to be something they want to be in for a really, really, really long time. If it's something for five years, maybe it's not going to be the right fit for them to go in, 30, 40, 50 over asking. Right. That's not going to be right for them. And it has to be that difficult conversation up front to say, then we are going to have to look at a different price point. And this isn't going to be the right fit for you right now. Mm-hmm. And even though it might look great, your eyes are going to get really big. But
I call it the hungry eye syndrome.
Exactly. They get the big doe eyes, and I know this is going to be really great. Mm-hmm. It's going to look really great. But unless you plan to be here for a really long time, this is not, from the conversation we had, this is not going to be the right fit for you.
So do you have experience where sometimes, because I'll hear some other agents say, well, sometimes the buyer's got to lose an offer or two before they finally really start listening to what I have to say. Do you experience some of that?
Yes, it is. Yes, that is very true. Sometimes they don't, it is very true. Yes. Sometimes they don't really retain what you're telling, mm-hmm. I guess, or what you're trying to help them with. And they're kind of their own ideas or their own little inner dialogue kind of gets in the way of that. And you're trying to give them the information for their best interests, and it sometimes can get in the way or kind of muck up the waters a little bit. But in agents, they can in some ways work together and give the information as much as possible on the offers that maybe you might have lost to, but to educate our buyers, which I've found has actually been really, very helpful in the market that we've been in right now.
Yeah. And I bring that up because you hire professionals for a reason. And, the point is that like Kelly is an amazing agent. I am lucky enough to work hand in hand, shoulder to shoulder with her to make sure that our clients get to where they're going as efficiently as possible. But sometimes when you have the family member or the friend that's giving you that negative information, it plants a seed in your mind and you start believing the person that bought a house 15 years ago, or your cousin's brother or sister that bought a house, their experience is totally different. They're not buying a house at the same time as you. They're not buying the same price point as you. Their credit score probably isn't the same as you. So the point is that when you're hiring a professional, you need to heed their advice because their job is they're in there. They do this for a living. They're not showing up at your job telling you how to fix us, the engine, right? This is what we do for a living, and we're trying to avoid you missing those properties because setting those proper expectations is everything.
Yeah, we see families that want to reach in and pay 40 or 50,000 over or over appraised
Yeah,
value.
like if
It's
I
no
want to win, you're not
problem.
going to beat me. If I'm going in there and I'm vibrating at a higher like level frequency, and I'm like, I'm going to win no matter what. You're not going to beat me, and you kind of have to have that mentality if you really want that house.
So maybe some agents will put the purchase price out there. I've seen it at 700,000 and the house sells for 750, 770. Guess what? That family's not going anywhere. They have the money. They want the house. They're going to raise maybe family, or maybe they don't even have a family. They just want that house for whatever their needs are, and they have the extra money. And we see families reaching in a little bit too, Kelly. They'll reach in and to their 401k. They need it. They don't want to rent anymore. They want to be the ruler of their home. They don't want to rent. They want to paint, start building equity.
Right.
They want all the rules that come with home ownership. Again, if it's a condominium, those are a different set of rules. But they want to have their own piece of the pie here, the American dream. It is still an American dream. And even though there's some recession fears out there, which we see, most experts do not expect a housing crash. So any of those predictors out there saying there's some housing crash, not
It's a
happening
completely different
here.
situation. It's a completely different situation, circumstances than what we experienced, 15 years ago at this point.
2008 or something like that. I don't even remember anymore. But 248-539-9790. So when we come back, if you're buying or selling, we want to hear from you. Keep it here. Hey, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show, again brought to you by Capital Mortgage Funding. We take your calls here, 248-539-9797, followed by Pat Caputo coming up at 10 o'clock. Tiger Baseball at 12:15, of course, a 1:10 start down there. And get out there early because the frenzy's starting. The Taylor Swift's in town. Taylor listens to the show. She's in town. She gave me a little text last night. Says, Harvey, I can't wait to wake up in the morning after my 3.5-hour show.
Tune into the Hardcore Mortgage Show.
Who doesn't listen to this show? But
She's an investor in real estate.
Oh, I'm sure she is. Diversification. We were throwing it out there that there's a gap between the consumer prices definitely widened a little bit as home values went up, the lack of inventory out there. It took like $70,000 to get the house in 2019. More, that's like $90,000 in income, Becky. And again, you need money to qualify for these loans. You have to be qualified professionally. You need to have your tax returns done if you're self-employed. There's a lot of steps that we always say behind the scenes here, Beck. So just like take it back a little bit, getting someone truly qualified and then having the knowledge so that they can maybe overbid in today's marketplace, understanding what their options are. It's just key to getting that house offer accepted.
immediately we have to get into what are your goals, where are you going, and how are we going to get there. And I like to talk. I describe myself as the backseat driver that talks a lot. So I'm going to tell you that you probably should turn right instead of left. But if you turn left, then I'm be like, all right, let's just do it. Here we go. But I'm going to give you those two options. But I'm definitely going to suggest that we turn right the first time, as well as like when you hooked up with someone like Kelly as far as your real estate agent. But there's a lot of people that when I'm speaking to them, they feel like they can't qualify, but they really do. And their credit scores are better than what they think. And then there's some people that they haven't filed their tax returns in the last 2 years. And the point that I'm bringing up is that the days of going to a house and running and looking at it, then writing an offer is over. You're not going to be taken seriously if you do not have a pre-approval in hand. And then you're also just doing yourself a disservice because you're not thinking, oh, well, I haven't filed my tax returns in 2 years. You're just living your life. I'm going to go on vacation. I'm going to buy a car. I'm going to do all these things. But here you are now, you're talking to a lender, and now you found the home of your dreams, and now you're 6 months away from it because you haven't filed your tax returns. Maybe there's some situations on the credit score. It could be a factor, a number of things. So the sooner that you have the conversation, the better. I recommend at least 6 months before you're even thinking about buying, because if you even have like a 680 credit score, for example, that's actually a still really good credit score, but I can very quickly identify maybe one or two things that might be able to get you up to a 700. Because the point is that we always want to make sure that we are setting you up for success. Raise your gaze, right? It's not just about what's happening right now in your life. It's about what's happening in 5 years from now. And what are we going to do to get you in the best position now? And it's also identifying what is your maximum price point. Because if you're looking at that house with Kelly that's turnkey, we got to make sure that if you can go in $30,000 over asking, how are you going to do that? Do you need down payment assistance? Do we need to talk about some of these programs that you qualify for? And that all starts with that conversation.
Right.
Kelly, that popped up on me. We still talk to a lot of first-time home buyers, families that have been renting for a while. And sure enough, I had a lady on the phone, $2,900 she's been paying in rent. So that's pretty heavy duty. We did the math on about a 310, somewhere in that ballpark, condominium, maybe a Novi, trying to use that association fee between $300 and $400. Now she's really building the knowledge up. And sure enough, one of the questions became the credit yesterday, and we got to work on it. Maxed out on a couple credit cards. Some more money's coming in the next 30 days where she's going to pay off these credit cards in full. Now, like you mentioned, Becky, we can now get that credit score up over 700, and she's going to get a conventional mortgage because although FHA still represented 12.7% of the purchases and mortgage that were taken last month, VA is about the same, about 12.5%. Conventional loans on condominium, that's the way to fly because most condominiums are not FHA approved. Got to have that better credit score.
Yeah, when it comes to a condo, they live by their own rules, and there's a lot that goes into it. It's not just the borrower that has to qualify, the property has to qualify, because you have to understand that you are now seeking ownership in a property that has a lot of hands in the cookie jar. You got to make sure that you're paying an association. How are those funds being managed? Or how many, is there checks and balances? Can anyone just dip into the cookie jar and take money out of those funds? Is it more produced by, is there more renters in there? And the reason why that is an issue is because someone that's renting might not pay that association, and they could issue foreclosure if your association dues goes delinquent. So just to educate everyone, there is a lot that goes into when you're buying a condo, and that's why FHA is a little bit more strict, because they identify those situations, because again, it's always about the consumer advocacy and making sure that you are set up for success, to make sure that you're not in a position of something that you can't control. If someone is not paying their association, or there's a roof or something like that, that could make your association dues go up from $400 to $700.
Yeah,
and now it's not affordable.
Non-warrantable condos comes into play, as you mentioned, some of the things that might make your condominium association a non-warrantable condo. Renters taking over, again, some big shot guys come in there and women come in there with a lot of money, and they want to buy them up as rentals because they have been appreciating in Southeast Michigan. Again, that could become a non-warrantable condo. You need to be a conventional buyer on most of those. We do spot approval FHAs, but now your offer's not as groovy because of maybe the lack of education. It still takes an extra couple of weeks to get that spot approval done, and it might just be easier where you don't get that offer accepted. Again, get that credit up, Kelly. We see it so often. We started the show off with really putting your plan together. Without that plan, you're probably setting yourself up for a little bit of failure, maybe just not as much success. So that's really the key: get in front of the right people.
Right, it really is. And if you're renting right now, and you're about 6 months out, 8 months out from the end of your lease, you want to start right now at least. At the very, very minimum, give a lender a call, give an agent a call, just to see what you can do, what you could qualify for, where you should start, what you should pay off, what documents you should need, what you should track down, what taxes you should file, what tickets you shouldn't buy to a Taylor Swift concert, where you should,
No doubt.
where you should keep your money, where you should put it. We're here to coach you. That's what we're here to do. This is what we do day in and day out, and we're here to be advocates for you and help you get into a home where you're building equity and where you're paying a mortgage no matter what. It's just whether it's your own or not.
Yeah,
we want you to build equity. This is our life. Our goal is to help you. Is to help you build equity and build up your finances for the rest of your life.
I got some stats here on that equity thing. U.S. median house price went from, in 2019, $274,600. That was the average of the median U.S. price. $274,600 in 2019. Now it went up $300 in 2020, went to $357 in 2021. In 2022, that $274 goes to $392. That's a huge amount of equity. Yeah. So those families sitting on a lot of equity, Becky, there's some good things they can do with it. And of course, we want new buyers to maybe experience the same thing down the road.
Yeah, I mean, even if you're just looking for your step-up buyer, for example, your right sizing, we'll call it. Someone that bought that house in 2020, like you just mentioned, that was $150,000 in equity.
Yeah.
I just heard you just jump up.
Yeah.
So you can take that and now apply it towards the next home that you want to buy, and you're not even having to dig into your retirement or your savings or anything like that. So that is tangible asset. Real estate is realized gains once you sell it. It's just like a stock market, right? But at the same time, if you want to invest $100,000 in the stock market, you need $100,000. If you're a first-time home buyer and you want to get into real estate and you're buying a $100,000 house, all you need is $3,000. Plus your closing costs and prepays. Think about that. It's a tangible asset that is going to naturally grow for you, historically speaking. There's only been, I think, 4 or 5 times in national history that there was a negative equity situation. But you have to understand it's all about that plan in place. We cannot preach it enough because you got to know where you're going, but more importantly, you got to know how to get there.
All right, 39% of the home buyers can't afford a 5% down payment. Fierce competition, low for sale inventories out there, surging prices. It's really put a strain on some affordability out there. There's no doubt. We feel your pain a little bit.
Let's talk about the DPA then.
Okay, let's do it. We got some great changes on it. It's hitting all zip codes.
Yeah, so DPA in doctor term, mortgage term, is down payment assistance. So you sometimes do not have to be a first-time home buyer to qualify for some of these. We are a national lender. We're a top 4 VA lender, and we actually have a lot of grant programs that you do not have to pay back. One of the most popular ones, though, is MIJDA. That is something that you do have to pay back should you sell the house, but if you're buying in a certain particular zip code, you do not have to be a first-time home buyer. They're offering $10,000, and the coolest thing that they actually announced, because they realize that there is a lot of people coming from the outside in, and they really want to help the first-time home buyer or the people that are going to be occupying the home. So now they change it to where not every single person in the property has to credit qualify. So if your spouse maybe has less than desirable credit, but you do, all you have to do is just factor in the overall income, because their income does come into play, but they did increase those income limits. So the point that I'm making is everything that we as a lender or any other of these outside entities, they're doing everything they can to help the affordability. And if you're trying to buy in even specific places like Detroit, you can get up to $25,000. If you're trying to buy in Livonia, there's $14,999. These are all things that we have that are we're going to scrape every program that we have to see if you fit those boxes. And the cool thing about one of our conventional grant programs is you could have a non-occupying cosigner. What does that mean? That means you're a first-time home buyer, fresh out of college, and mom and dad are willing to go on the loan with you. As long as you are a first-time home buyer and you live in a certain particular area, you actually can get $7,000 of free money to go towards your down payment and closing costs to help you afford that home. So if you don't have it, don't let that sit you on the sidelines, because it is the American dream, like you said.
Number one thing is we're still seeing some people clicking buttons out there. And again, one of the first things we actually do is get you out of that, Kelly. And we get you set up with a Kelly, and then Kelly McCree gets you set up on her portal. So now you can look at everything that's available. And that's really the key. If you're clicking buttons on these sites, you're really getting yourself in trouble. And the reason why is they start selling your name and phone number out. You become a walking fool. I'm sorry to say it that way, but you are, because you're just out there. You're treated as a number two. And sure enough, one of my newer buyers out there was FHA approved only. Now, she also needs the MSHDA loan. Great loan for everybody, but again, a little bit harder to get that loan accepted. Can we switch her to a conventional loan? And sure enough, she's now a Freddie Mac Home Possible. Becky, you and I study the guidelines, not like our friend Lisa Lawson, but we know these guidelines. And sometimes we just click it over to another program. And I was like, we were working with our team, and Tanya even worked it out for me. And she goes, Harvey, she's approved conventionally. Freddie Mac Home Possible to 3% down. You tie it in with the MSHDA, $10,000. She's a real aggressive buyer in today's market now.
Yeah, it's all about it's not cookie cutter. This is not soup du jour. We're not Dumb and Dumber. I'll have that, right? I don't want the same as everyone else because I'm not the same as everybody else. Everyone's program and situation is different. We are experienced professionals creating experiences for our buyers, and getting them in the right vehicle as I'm the backseat driver is key.
I'm glad that you said everyone isn't the same, because I think, it's a very common misconception that everyone comes into the situation like, what's right for me? But we have to really unpack what they need in every scenario, and we have to know their story, what their needs are, what their motivations are, and figure out, dive deep and see, what they need, and really provide the solutions that's going to work for them and their family.
All right, we're going to break things down when we come back again. How much money are you working with? You got your down payment, you got closing costs, you got your escrow account, the homeowners. We'll break it down for you right here at 248-539-9797. Keep it here. 248-539-9797. That's where we take our calls here. 9:44 on a gorgeous day here in Michigan. The rain is coming, folks. It's coming. Maybe tomorrow, maybe Monday, maybe Tuesday. We need some rain here. But besides that, what a wonderful place to live. I'm going to get out there on one of the lakes today for sure. I think I'm out on Sylvan Lake today, Sylvan and Otter Lake. And if you're out there, be careful. Make sure you get all your fire extinguishers and all the stuff. The sheriffs are out in full force. Do not drink and drive the boat. You can park it and drink all you want, but sober up before you get out there and do the right thing. We want everyone to be safe. Hey, we take your calls, 248-539-9797. I'm Harvey Freach. She's Becky Ailey with Capital Mortgage. And, of course, Kelly McCree joins us from The Good Company.
It's me. Hi.
And Kelly, let's go out. We got Bill calling in, William calling in here from Chesterfield. Good morning, Bill. Welcome to our show.
Good morning.
Good morning.
Morning.
So I'm looking to purchase a couple acres of property. First, I want to buy the 1 acre. I want to throw a basement on it and put like a modular home on it.
I'm cool with that.
So the realtor is also the broker on the property.
Okay.
So I'm curious, like, how once I purchase the property, obviously I need to put the basement on it, and I'm in construction, so I know trades, so that helps. But I'm curious, like, how do I bundle the modular home and the property all into one mortgage?
Okay, well, great. How you obtain that land is really key. That's the beginning steps here. So do you have a decent amount of money you're working with? Because you can buy the modulars with, 5% down and work with those companies. Of course, the price of them delivering usually the 2 sections of the house, if it's one of those types style homes. Yeah. And you're going to, so you can go minimal down on those purchases. We offer those mortgages, but buying of the land sometimes could be handled with a land contract. And then sometimes we could go ahead, because you have the land contract, we can go ahead and add those two together and give you one mortgage that would cover both. And that's usually the way. How much, just got curious, how much is an acre that you're looking at? What does that cost?
Well, the 1 acre, because it's like a pie shaped, is going for 60, and the other acre I want is 90.
Okay, well, you haven't decided, but you're just buying one of them. You don't need 2 of them, right?
I'm buying the one at first. My wife likes some space, so we're going to buy the other one.
That is a lot of space.
Bill, are you currently a homeowner?
Well, we have an acre we're sitting on now, but yeah, we're kind of comfortable with having a little space between us and our neighbors.
Yeah, I feel that.
Are you currently, do you have a home now to sell, or do you have some equity in a house now?
No, we lease. We're renters.
I would reach out to the homeowner on here, and like you said, if it's a real estate agent who owns the land, and say, look, let's go ahead and put a deal together. I'll give you a land contract. You could pay them 6%. You can give them, I don't know, hopefully you got $5,000 or $10,000, something down.
Sure.
10%, of course, is only $6,000 of 60, or if the other way, if it's the 90, you need $9,000, and you put a land contract together, and then you can go ahead and pay off the land contract with the loan. We can do it as a refinance after 6 months. Yeah. So that would be a refinance, Becky, and you could get the house delivered to the property, and you can put it together.
Yeah. The other thing too is, like, when it comes to like land loans, right? So, unfortunately we can't do like a vacant land loan for you, but we do have other contacts for people that can, can help you do that. Yep. And then we can kind of decide and help you kind of how we're going to get to the end result of what you're trying to accomplish as far as with the land, the modular home, because we do offer those like financing terms like Harvey mentioned. So we'll definitely hook up with you after the show and get you set up with the right plan and make sure you have the right people in place.
Yeah, if you can't do it that way, there are some local banks. Again, if we can't do it, we'll set you in the right direction. That's the key.
Sure.
We can't do everything out there. I think we can, but sometimes this vacant land thing comes a little bit where you might need a new construction loan and put it all together that way. So you got some options out there.
I've checked with my bank. They won't do that. I mean, obviously there's like certain credit unions that I've been told. Mm-hmm. I haven't called them up yet. But, obviously I don't want to give up all my savings to put a basement on the property. And then I guess it needs septic.
Yeah, so, you got to have water. You got to do plumbing. I mean, there's a lot of moving parts on this property for you, especially if you're the one that is creating it. So we'll definitely hook up with you. Make sure you got the right people in place, because we got to make sure that you have a good team and you're making good decisions with the right people. You
brought it up too, Becky. Good stuff out there. You got well and septic. You got running the water. Sometimes the city has regulations on this, and they've already got maybe the water all set up, and then you might cost you a little bit more money to bring the actually city water in. So do the right thing. You got to hook up the gas lines. There's a lot going on new construction. It is fun and exciting, and there's some great modulars out there. We do mortgages on them all the time, especially when they're on foundations, on their own foundation. You own the land. All right, we're going to continue the calls here. We've got Ratash coming in. Hey, look, you're on the air. Come on. What's your question?
Hi, my son is in the process of closing on his second house, and he's got about 20% down. Is he sure his real estate agent is getting him the best interest rate on the mortgage?
Oh, wait, is your name Charlie? I'm sorry, Charlie.
Yes.
It came over different. Son is ready to close. So you're getting a house now. It's your son getting the mortgage?
My son's getting the mortgage, yeah, and he's got about 25% down.
Okay. Yeah, so that's a good down payment. Now you mentioned the real estate agent. The real estate agent, it has nothing to do with the interest rate. So it's part of that's the real estate agents make sure he is getting the best negotiated terms for the property. If there's any concessions or what the actual terms of that purchase was. Now the lending side is what is the loan amount, what is the interest rate, the payment, what he's bringing to the closing, and if he's putting 25% down, that's a really strong number to get to have as a down payment, which means he did all the right things. He saved his money. He's, financially responsible. He's probably better than 90% of some people that are out there buying right now. So, I'm not sure what your rate is and how deep you are into this transaction. So I'm not here to say we're going to beat all the rates, right? But, I will say that is going to put you in it should put him in the best position for the best interest rate. But we can kind of, talk about, what he's looking to do and what he's getting right now. So are you under contract?
He is, yes.
And you know what I like, Becky? And here, Charlie, no doubt about it. Thanks for the call too, Charlie, is definitely 20% down, you can get into a second home. So 25% typically gives you a little bit better interest rate or less closing costs. So he's got to figure out the numbers too, because depending upon what the numbers are, he might, we lost him. That's okay. But
I want to know, is it a truly, because my next question was,
and we'll call you after the show.
We're going to call you after the show. I don't know what happened, where you went, but we'll call you after the show, because is it truly a second home, or is this a second home that he's buying and selling and it's going to be a new primary? So for our people listening, if you're buying a second home and you have a current primary and this is a true second home, like a lake property.
Or on a golf course.
Or on a golf course, but it's a second property that you're not going to occupy, or you're going to occupy some of the year, right? Those interest rates now emulate investment property interest rates. It used to be where a second home and a primary home, those interest rates emulated each other, and they're the same. Post COVID-19, the government got involved, Fannie Mae, Freddie Mac, they changed their guidelines, and now those interest rates emulate more of an investment property. So those could be high 7s, high 8s if it's a true second home, because they realize that they're not trying to give the same benefits to someone that might be renting that property out or doing an Airbnb. So they have changed those interest rates. So we will call you after the show, Charlie, and make sure your son is in the best position possible for the terms he is trying to accomplish.
More options, more knowledge is the way to go. Kelly, you got a cool property. Ferndale's it's a hotbed for everyone wants to be anywhere off of Woodward. I actually took Woodward home from the pizza joint last night. I went with my buddy Steve, and we hit the old Green Lantern Pizza. Give them a quick shout out because the pie was delicious.
Always.
Woke up with the heartburn and everything. Maybe I ate too much. But definitely took Woodward home. And, it's so fun already. They see the hot rods are out there already. The Motor City's jamming, everyone's old cars. It's just fun to watch the passion. But Ferndale's one of those great cities, too.
Oh, it's fabulous, Ferndale.
Yeah.
Absolutely. Oh, yeah. I have a listing coming up this week. We got a townhouse, 3-story townhouse,
Wow.
3 beds, 3 baths. It's beautiful, 1,500 square feet. Yeah, it's a gorgeous one. I think she'll go quick.
Okay, that was actually a 2020
I'm sold. I don't even know what it looks like yet.
2020 build, baby. Yeah, it's really nice.
Yeah, reach out to Kelly for sure. She's at the Good Company. You can find Kelly McCree there. And just ask her, hey, Kelly, you got that cool listing coming up? Anyone who is out there, if you know friends or family, sometimes this is how you find out about that property. And all of a sudden, you're the first one to call the agent. And sometimes working with just your company, maybe her buyer's agent, maybe they don't have a buyer's agent yet, your friend or family, now you can hook up with Kelly and put the deal together. And sometimes that little pocket listing type of thing, or just working directly with someone who's got a lot of housing on the market, or that office does a lot in that area, like the Good Company does. Up and down Woodward, they always got those properties popping up.
Yeah, I think they call them the premier listings, right? That you guys, so like they're coming up, and then your clients actually can get first dibs.
Yeah. It's our Good Company in that area. Exactly what our name is. We're some good company.
Yeah, I'm lucky enough to be, partners with the most amazing real estate agents and companies. And, when you've been in the business as long as we have, you can identify who's worth their salt and who isn't. And I will say that Kelly, her team, good company, Stoneway Group, they are literally the top tier of what you need to be in line with, because they're not out here selling, they're helping. And there's a huge difference. And you hear that in the conversations that you're having. You know when someone is trying to sell you your ketchup popsicle with white gloves, right? And you don't want it, right? And you know when someone's really genuinely invested in your well-being as far as now and in the future.
Becky, we tell some folks, look, maybe, just maybe, these interest rates will shoot down next year. There's no guarantee of this. There's nothing out there. We've heard some experts in quotation, I'm doing the air quotes here.
Yeah.
Oh, for sure the rates are going to be down by the summertime. There's no guarantee of any of that. But you can set yourself up for, if you did only put down 5 or 10% down, where a year or two from now, maybe if the rates come down, now you've got so much more equity in the house. Now you can either eliminate the PMI, you got in cheap, maybe you're paying the private mortgage insurance, maybe you got an FHA loan at 3.5% down, you're paying that MIP, that mortgage insurance premium. There's ways to get out of that because the appreciation's going through the roof.
You're controlling what you can control, right? You now own this property and you're in control whether you want to buy, sell it, you want to refinance it. If you are living in someone else's home, they could call you tomorrow and say, you have 30 days, I'm selling the property. You have zero control over that situation. So get in control of your own destiny, because and you can use that property, you can sell it to somebody else, you can sell it to your family member, you can put it on the market, you can list it with Kelly, you can do all the things, but you can't do all the things when you are paying someone else's mortgage.
Absolutely. I take control of it. And they're not making any more land. You might as well own your own piece of it.
Yeah.
There you go.
Lake houses, all that. I mean, literally, give me a lake house. That's my next agenda.
I keep getting those calls. It's the weekend here already. Get your documents together. Call a true lender and make sure you're approved and ready to close in 30 days. No more of that pre-approval stuff. You need to be approved and give that confidence to the listing agent that this deal is going to close in the next 3 to 4 weeks. And that's how you're going to get your offer accepted.
And I want to say happy Pride to everybody out there. It's Motor City Pride in Detroit. Everyone be safe, and be safe at Taylor Swift. Everyone out there that's going to be celebrating her and having a good time tonight as well.
All right, keep it here on 97.1 The Ticket. Pat Caputo comes up next. He'll tell you about hopefully the Tigers getting back onto their winning ways because they're in a 7-game slide. He's got tons of that, tons of Lions. Keep it here, 97.1 The Ticket. We'll see you next Saturday.